Hello, welcome to another episode of Global Voices. So I'm Hugh Davies, co-founder and CEO of Ozone API. And today, for the first time in a little while, we're going to be focusing on the UK open banking scene, and particularly what's happening around commercial variable recurring payments. And I'm delighted to be joined by Nicole from Yapily. Nicole is definitely leading the charge in this space and has been part of many of the working committees and driving the overall strategy on behalf of Yapily. So Nicole, welcome. Thank you for joining us today.
Thank you for having me.
Excellent. Well, let's start maybe with just a scene set around the current state of open banking in the UK. I mean, you guys are right at the center of it. How's it going?
Yeah, it's been a really interesting time. So open banking from a usage perspective has been growing steadily for years. I joined Yapily in 2022. And when we started talking about it, we were talking about CVRP, we were talking about sweeping VRP as well. And we were talking about that hockey stick moment. And what I think we'd say is that we haven't had that hockey stick moment yet in open banking. So things have been growing steadily. We're at over 30 million payments a month, which is not bad. We're at, I'm trying to think off the top of my head, but I think there's about 15 or 14 million users in the UK right now. I correct myself, 16 million. I just looked on the OBL website. It's 16 million users in the UK. So it's growing nice and steadily. And I think what we would say is that there's some sort of things that we're waiting for in terms of unlocking certain use cases, and also just maybe some other changes that we might get into a little later around things like branding and awareness amongst users and user experience that we could do that would really kind of take this into that hockey stick or TFL moment that we've always been talking about.
And yeah, and I think it would be good to get into that. But right now, what are the use cases that Yapily are seeing really sort of driving the volume?
Yeah, I think on the payment side, we're seeing wallet top up is probably one of the biggest ones, but also growing number of online checkout use cases. And then on the data side, we see a lot of use of data for onboarding and account validation. So those two use cases. And then what we're actually seeing more and more of is customers coming and wanting to use both payments and data together, which we think can be really powerful.
And is that typically in a sort of financial management context, or what are the sort of use cases you're seeing there that are combining data and payments?
So usually it can be that, but it not necessarily. We see a lot of really, because we're at the infrastructure level and people are really building value-added services and taking that and really transforming the data and the payments. We actually see quite a variety of things. So a lot of the onboarding, a lot of the data use cases are, like I said, around onboarding. So they're wanting to make sure that they're bringing on customers that are going to be able to pay and afford whatever they're selling. That might even get into maybe the credit and lending space. So we see that. And then the payments kind of as the follow-up kind of piece there, right, as part of the value proposition.
Excellent. Yeah. And with payment, you were talking a moment ago about kind of the hockey stick moment. And I think for a number of years now, the expectation has been that commercial VR is the thing that will get us there. In 2019, when I was part of the leadership at OBL, we did the first commercial VRP pilot as part of the S3 sandbox. And I must admit, at the time, I perhaps naively thought we'd see commercial variable recurring payments start to scale within the next year or so. And I know the industry's been working really hard since then to try and put a commercial framework in place that will allow it to scale and effectively get almost like the scheme type layer in place that allow this to happen. You guys have been involved in a lot of the industry discussions, progress, sometimes lack of progress. What's been happening and where are we up to?
I think we're close. I think we will see a launch next year. One next year, I'm really pulling for as early to Q1 as possible. That means March. I think that's what the industry really wants, at least from the TPP side. And I think actually banks and also regulators are really pushing for that as well. I think the banks are really wanting to show that they can do something without the regulatory push, right? And so we're all trying to come together around that goal. I think the challenge is managing the different timescales that certain businesses need to actually make decisions. right now, basically the kind of steps that we need to go through for this to work is we need to incorporate the scheme. And then once we incorporate the scheme is going to hold a multilateral agreement that everybody will sign into. And then also they will set the price. And so we need those pieces. And to do this incorporation, some of these banks have this processes for incorporation that can be quite long and challenging to go through and need quite a bit of evidence. I think it's a little bit easier on our side and the fintech side. It's a little bit looser, but yeah, I think what I've really noticed in this process as we work with the banks is just how different the businesses operate and how much it's quite challenging, I think, for the colleagues on the banking side in terms of all the kind of stakeholder management that they have to do.
Yeah, I was at Open Banking Expo a few weeks ago. I was chatting to some of the banks, and they said one of the challenges is if you're one of the big banks, it's really hard to be around a table and talk about a pricing model for the industry. From a competition perspective, that's a challenging thing to do. It needs an entity to almost create the scheme and the framework, and then people sign up to it. So where are we in the process? What are the steps that still need to happen to get us to that launch?
So like I said, incorporation is really the key thing that we need to do. And then it will be kind of in that new body's hands to do those things that the banks themselves can't sit around the table and do from a competition perspective. We have had some consultations and outside consultants working on pricing models. So when CVRP launches, this is going to launch in waves. And the first wave is low risk use cases. So that's going to be regulated financial services, utilities, and central and local government use cases. So things that are considered, and I'm going to put this in air quotes, low risk. So with those use cases, we OBL and the scheme has commissioned work from a company called Frontier Economics. And so they've actually done, I think it's like 100 pages, quite an extensive report on kind of that came up with a range of pricing options. This one's more of like a cost recovery, flat fee kind of model that can go anywhere between, I think the low end was like 4 or 5p up to like 16. And it just depends on what cost recovery period that you want. Separately from that, then for wave 2, which is e-commerce, UK Finance commissioned Deloitte, and we've been participating in that work as well, to do more extensive analysis about what we could be doing as we move into wave 2 from a pricing perspective. Obviously, I think those two, wave 1 and wave 2, and the pricing and commercials around that need to go together. So not just the actual pricing, but also the MLA framework. So everything's kind of being built in a way where it needs to not stop progression or create some sort of awkward transition or rework or anything like that. We want to be able to provide consistency into the market. So those two things do need to talk to each other.
Okay, no, it sounds like it is progressing. And what do you think are some of the barriers that still exist for this to launch and scale outside of the process points that you've touched on?
I think we're pretty close now. I think this pricing topic and the competition considerations has been something that's been taking quite a bit of time for us to work through. But I think we are nearly there in terms of a kind of point of view of how we want to take it forward. I think there's going to be some meetings in the very near future, in fact, this week and also in early December with the FCA to kind of go through how we're going to be addressing these things. And if we hopefully, and this is, I think some of this sits a little bit more on the concern on the bank side around the competition stuff. If we can find a way forward with a recommendation, FCA's behind it. I think us TPPs, we want to move quickly, and if we can kind of get to that resolution, then we can just push forward towards incorporation. And then it's just a matter of kind of operationalizing the scheme, getting everybody to sign into the MLA. It shouldn't be a big tech lift. I say shouldn't. I obviously don't know the internal architecture of a lot of the banks, but at least from an API perspective, it should be very similar to the sweeping BRP API, which all the CMA9 banks already had to launch. So from that perspective, it shouldn't be that much more work. We are expecting level of disputes to be quite low in the wave 1, just because of the use cases being quote unquote low risk. So hopefully that means that once we have incorporation, the MLA is finalized, the pricing is out there, we can just start signing onto the MLA and getting ready to go.
And are you seeing a lot of demand from the merchant ecosystem?
I think it's hard to say because we talked up CVRP so much in the past and then haven't had results. And I think this is where a lot of this pressure is to do something quickly. And in the first half of this year, have this product launched, not just one bank and one TPP, but like, a good handful of banks, 80% market coverage kind of thing. A lot of TPPs, real traffic going through, I'm hoping by, late spring, summer timeframe that it's scaling like that. Because we've talked about it so much, and I think people have gotten tired, and then I can't tell them what the price is going to be if I go and engage with a merchant. I can't tell them that. There's still a lot of kind of unknowns. And so we've been really careful. We want to continue to put the pressure on. We need VRP. We want to talk about that. We definitely want to have merchants be educated about what it is and interested. And we definitely in the past have gotten a lot of interest. I just don't want to fatigue them. Yeah. Because I don't want to continue coming and saying it's coming and then I can't deliver on that. And so I think we have to wait. But I know, we actually have, for us at least, a customer who's very interested in being our first pilot customer on Wave 1 CVRP. So we've been engaging with them, can tell you a little bit about kind of what benefits they think they're going to realize and why they're interested. We talk to a lot of payment service providers and they all are asking what our plans are for CVRP and when that's coming. I think they see this as something that they're going to have and to be able to offer to their merchants when it's available. So yeah, I think it's there. I just think maybe people are a bit tired of it and they're waiting for it to be a tangible reality.
Yeah, and it's understandable, right? In the industry, we've been talking about this for so many years now. So I'm certainly keen to see it get there.
I've had it on my product roadmap for 2 years. I am very embarrassed to say I think I have a quote from 2023 being this is the year of CVRP. So I'm gonna go on record and say 2026 is the year of CVRP.
I really, really hope that's and you mentioned there, so one of the merchants you're working with, they've got a view of what the benefits will be. I mean, I know what they'll be, but yeah, maybe you can bring that to life for us for a moment.
Yeah, so this customer they're in Wave 1, so that means they work in the regulated financial services, utility, government space, trying to be quite vague. But they use direct debit quite a bit. And so for them, they're looking for something that's a lot more flexible than what direct debits are able to offer. They're also, so for them, that's key. Then they also have customers who are paying kind of one-off through a debit card. And so the other use cases for them is to move some of that debit card usage. And what they're really keen on there is their transaction values are quite high. And so moving from an ad valorem kind of cost basis with a debit card, they think that they can have some margin improvement. So for them, it's a combination actually of both. And it's very interesting because I think in Wave 1, a lot of people thought it was just going to be debit card or direct debit replacement. But this one, we're looking at both debit card and direct debit replacement, but for different reasons. One is for added flexibility, and the other is for kind of a bit more of the cost savings.
Okay, that's interesting. Now, I'm expecting as well there to be quite a lot of opportunity in the B2B payment space, particularly around things like supplier-initiated payments. Now, a moment ago, you mentioned there's probably not a lot to do for the CMA 9 banks because they're already on version 4. One of the challenges we'll see is outside of the CMA 9 banks, pretty much every bank is going to have to do a complete uplift of their APIs to be able to participate. Certainly that's what we're expecting, and we're starting to have that conversation with banks.
Yeah.
But yeah, how are you, I mean, do you think, well, actually just B2B, do you think there's an interesting opportunity in that space?
Yes, I think there's a lot of challenges, but it's very interesting. Yapily, we do a lot of work with B2B, actually on sweeping VRP. We have several customers who are in the B2B space doing kind of expense management type propositions where they're topping up a wallet. So I think the opportunity to kind of expand that into other B2B spaces is really really powerful. I think where we're at right now is we need to do more persuading of the banks that B2B is commercially viable for them. Yeah. I think there's two challenges around this. One is that because they, if they have to uplift APIs, they're like, well, do I have to do it for my business division, right? And who knows, that could have done through an acquisition. It could be on a different tech stack, like all that kind of stuff. So they have concerns about that. And so here where B2B volumes tend to be, it's higher value, but lower volume. Finding out how that's going to work and how to make that commercially viable is going to be one thing that we need to think about. The other is the multi-auth situation.
Yeah.
Like I said, we have experience with this on sweeping VRP, and we see, challenges around multi-auth and making that work in the sweeping space. So I think that user experience angle in terms of setting up that payment mandate is going to be something that also needs to get worked through.
No, I think that is an interesting point. I'd say personally, I think there's a huge amount of opportunity in that SME space, but there are, as you say, different challenges.
I actually have a letter that I haven't sent yet that I'm planning to send to the FCA around this, because I do think the SME opportunity is really, really powerful. And especially if you think about it, how it links in with what we're talking about with open finance. We're actually participating in the FCA's open finance tech sprint. And there's a whole section on SME financing, right? And so you think about how you put those things together, and you're using maybe open finance data so that you can, and we work with several accounting and ERP platforms as well. You're pulling in the data, you can see the cash flows, you can, sorry, my lights just went out. You can see the cash flows, but then you could also then combine that with payments, either file payments or with CVRP for accounts receivable. And it could be a really kind of powerful proposition. And it really, and combine that with e-invoicing, all of these different things. You can see how they build on each other. And you could say, actually, there's not a great way to pay for SMEs right now. You're going to create a virtual card, and if you're receiving money that way, that can be very expensive as a business. And so I think open banking actually is very attractive from that point of view for businesses if they want to collect payments. But yeah, I think user experience and getting the banks on board on some of this stuff, I think is a bit of a hurdle.
Yeah, I agree. I mean, if you can unlock some of the value associated with late payments in the economy, though, the impact is huge. But you talked a bit there about user experience. One of the topics that always comes up is around what happens when things go wrong, and also trust. The regular conversation is, should there be a trust mark, all of these sorts of things. And I know you guys have did a recent survey in this space around expectations. So yeah, what do you think is going to, around the framework, what are we going to see in terms of user experience, establishing trust, the liability framework? What should we expect?
Yeah, wow, that's a lot to talk through. Okay, you'll have to keep me on track. So yeah, we did a survey earlier this year with YouGov, and we talked to both consumers and merchants because we wanted to understand what's kind of missing to drive open banking adoption. And so it was very generic to alternative payment methods. We wanted to kind of understand how they would think about open banking, and not specifically like a CVRP survey. I feel like every TPB does a CVRP survey. So we were just like, let's just unlock open banking. Unfortunately, I wanted to do conjoint analysis so that we could get under the value proposition. I did not get my way. I think that's a very expensive piece of research to do, unfortunately. But what we did was we played around with both whether a merchant was known to the user or not known to the user, to try to get into some of that kind of element of branding and trust and some of that stuff. So we were playing around with some of those variables, and then we were playing around with price ranges and whether it was a point of sale or an online kind of transaction. And yeah, we found some really interesting stuff. On the consumer side, what we really found was that, especially for low value purchases, you could think of these things as like things that you're going to do every day on the regular, that people just really value convenience. So they just want something that's going to mimic almost like your wallet, Apple Pay, Google Pay type experience. They just want to tap and go, and so how do we get open banking, especially when you have to do a CA every time, right? And this is where I think CVRP really helps with some of this stuff, because you set up the mandate once, and then after that, you're exempt from SCA and you can just make payments on the go. So I think that experience, especially on the low value payment side under £100, is something that people are really looking for, and that needs to be there to reduce some of that friction for things that people are going to do on the regular. And then what we saw as the value of the payment went up is this need for some sort of consumer protection, which I totally understand, right? If you're going to spend, over £100, so you're going into thousands of pounds. If something goes wrong, you want to make sure there's a way for you to get your money back. Interestingly, also, something that was consistent across all values of payments was security. And this is something I think open banking does really well. and people do not know. So this is where I think some of this branding needs to come into play. I have to say, when I first started, I didn't think open banking needed a trust mark, but I've done a 180 flip. So I completely believe, and I think this is where we're going to go with this new scheme. This new scheme needs a name, whether it's Pay by Bank or something a little bit sexier. I don't love Pay by Bank as a brand just because it's a mouthful. I'm quite jealous of Sweden. I really like Swish. Yes. So, but I would like a verb, some sort of something like that. But I think we need I don't know if it needs to be a trust mark, but definitely a brand. And I think when we've asked some of our customers about this, they all agree like this some sort of brand would be really valuable to kind of communicate that value proposition and say, this is really secure. You're not passing sensitive payment details. It's through, secure APIs. So I think that's really important. On the consumer protection side, I think this is going to be something that's going to be a really big task to work through in 2026 as it relates to CVRP. So because it's going to be imperative to unlock for e-commerce. We don't think it's necessary right now because we're in these low risk use cases. But as we move to e-commerce, 100% we need to figure out what we want for consumer protection. It's very interesting. In terms of thinking about the model of how this is going to work, because if we go, there's this kind of conversation, it's almost a continuum. Do you want to just keep it as it is today, which is you have the basic statutory protections that you have if there's a missed payment, which is actually very surprisingly very close to what you have with the direct debit guarantee, right? There's not actually a lot of consumer or purchase protection, let's say, in a direct debit. It's mostly missed payments, late payments, that kind of thing. As opposed to anything else. So you could kind of go on that side of the scale, or we could be going all the way up to, what you get with a credit card, and that kind of value. So there's kind of a lot to play with there. I think what we hear from the merchants, they don't love chargebacks. Not surprising, I don't think. Yeah. When we surveyed them, and I'll pull up the stats really quick, what they were saying to us was the top thing that they would like to have changed is that they don't think the disputes process is very fair or efficient. And so the number one thing they'd want in buyer protection would be a much more efficient dispute process. So I think that's something that we definitely need to take into account. The next biggest thing was better chargeback fraud prevention. And I think we've seen this. I've seen CFAS data on this as well, right? And I think it's kind of linked to the kind of challenging economic times, right? People are going to try some things. Maybe they feel like it's like a victimless crime, right? To file a chargeback for something that they actually received. So that's the number two thing. And then lower chargeback fees was the third thing they said. And then that was 49, 47, 46%. And then funnily enough, 41% said no chargebacks at all. You've got the merchant community on one side, and I think you do have to think, what's this open banking value proposition? Is the open banking value proposition different than a debit card? Is it the same as a debit card? I think we all know it needs to be low cost. The FCA has said they want it to be, ubiquitous and low cost and drive pricing competition in the market, so that there's choice for merchants. So thinking about that and how you do that, and then we have the banks, and I think most of the banks would tell you they're concerned about customer complaints. And they would be concerned if they don't offer a chargeback model, what that would do for kind of satisfaction and consumer duty. Yeah. And so how do we square that circle, right? Because as we add more and more kind of go towards a chargeback type scheme, that's going to add cost. And so I think this is a really challenging kind of piece that we need to play in, where we think we need to be creative, really think about some of the technology that we could use so that we can come up with a dispute model. What I do think is going to happen is I think TPPs are going to be bearing a lot more liability. They're going to have step in a little bit more of like a merchant acquirer type role, where they're going to have a lot more of the liability for when something goes wrong. I think so. Yeah, I think that's what's going to happen. We'll see how it kind of plays out across the year. I think we'll end up somewhere between more than direct debit, up to maybe a light debit card.
Yeah,
I'm going to go.
I completely agree with you that the balance of the liability is really important here, because if at the moment basically everything lands at the door of the banks, and then it gets really difficult, and the incentives just aren't there. Now, you talked within that about competition as well. Do you think there's actually a role for more than one scheme for how commercial VRP may work? I asked that because just last week we saw the first live transaction through Visa's A2A commercial VRP program. There's big things still to deliver in terms of defining a liability framework, a brand, all those things you talked about. Do you think we could end up with multiple schemes here?
I mean, I think we're on track to end up with multiple schemes here. I think we're on track to have at least 3. I think how that will play out long term, I'm not sure, because it's a new and emerging market. So I can see why people are bringing different kind of ways of solving the problem. I'm not sure if they'll all be sustainable long term. And also, I think it'll be really interesting. I think a lot of this, and this is open banking in general, lives and dies by how many banks end up joining the scheme, because ultimately, when we talk to our merchants, one of the first things they need to understand is the coverage, and because they want to serve all their customers are going to bank with different banks. So they need to be connected to as many banks as possible. So we could see worlds where the banks join all the schemes. We could see a world where banks only join some schemes. So it might end up being quite fragmented. And then I think how the TPP steps in and kind of manages that variation and variability, because I think it's really important, going back to this earlier conversation we had with trust marks and consumer trust and understanding a value proposition, that could get really messy for consumers if we don't kind of try to keep that straight, right? Yep. So, especially if one bank is in one scheme and another bank is in another scheme and they have completely different, rule books, that can be very challenging to manage. So part of me is kind of hoping we don't fall into that problem. Because I think from a consumer perspective and also from a merchant perspective, it'll just be a lot harder to manage. So hopefully what we'll see is that we get some schemes, and if they can compete, but there's a generally good reachability for all the banks across the schemes, then you're competing on different things potentially. One could be competing on, one could be great for one sort of set of use cases and value propositions, another for another set. And then I think you could see that working kind of long term. But if they kind of offer the same thing, or we get this fragmentation with coverage, I think it's going to be a very challenging space.
Yeah, I agree with that. You could see kind of different areas of specialism, but I personally think we will end up with multiple schemes, and that should be something that drives pace, because frankly, it'll be the one that achieves critical mass that sticks. So I guess just to round it off, so it sounds like there's some great progress being made. There's still some big hurdles to clear. You've already put it out there that 2026 is the year. So where do you think we'll be by this time next year?
Hopefully we will have launched, or will soon to launch, e-commerce. Okay,
so the second phase.
The second phase, I think that's what everybody wants. This first phase, it's really about learning. And making sure it works, kind of working through how the scheme's just gonna, it just needs, we're gonna have to iron out a bunch of things. It's a new scheme. We're setting it up as an independent company. We're not like Visa over there, who's used to managing a scheme. This is going to be new for us. So so this first phase is going to be a lot of learning, and then working towards moving to e-commerce. And I think everybody wants to move, because that's where we see the real kind of uptake and volume coming from. Everybody wants to move to e-commerce as quickly as possible.
Yeah, I think it'll be really interesting. I hope you're right. This is so. Firstly, thank you. I think this has been a really interesting discussion, and the potential is huge. We just need to look at some of the other markets where open banking and real-time payments have combined to solve a broader set of use cases. And the shift in volumes is staggering. You look at markets like Brazil and India, and I think we'll see the same in places like the UAE and Colombia. I think the potential here is huge for the UK. So I'm not going to hold my breath, but I'm very, very hopeful that you're right, and we'll see that level of traction next year. So Nicole, thank you. This has been a fascinating discussion, and we'll have to check back in the future and see whether we got it right.
Yeah, thank you very much for having me.